Okay, awesome. Welcome everyone. Tonight's topic is let's find cash buyers. We will also cover wholesaling and the type of assignments and double closing. So it's going to be very interesting tonight. So the first thing that we need to do is let's go ahead and jump into the system and then find a great deal that then we're going to quickly analyze, and then let's try to find some cash buyers, and then we'll talk about wholesaling, the assignment, and the double closing, when you need to do an assignment versus a double closing. Okay, so having said that, can I please have some members send me an area that you want us to find some great deals, whether from MLS or off market? Okay, so we're getting some areas: Berwyn, Worth, Des Plaines. Okay, so let's just find them in those areas. So as you send them, we'll just put them in the filtering criteria. Okay, Round Lake. So we're gonna have several of them. Okay. Awesome. So we're gonna find some awesome deals, both from off market and then MLS, okay, just for a change. So we're going to start with, for off market, we're gonna find pre-foreclosures. Okay, so in here we're gonna find and filter these by cities. So I'm taking the cities that you have sent over to me. So we're gonna find Plainfield, Worth, Berwyn, Round Lake. Okay. Anybody else? Okay, sounds good. So let's just take those areas and then find some great deals. So we're going to click on search. So again, we're in pre-foreclosures. So these are people who are under financial distress and they're about to lose their property. So one of the things that we're gonna do right now, we got too many properties, 618. So something to keep in mind is that we have to filter these by high equity. Okay, we wanna target properties that have over 50% equity. That means that, for instance, if the property is worth 100,000, the owner owes only 50,000 on the property. So now it's a more reasonable number, 38 great off-market deals. Okay. So here we found most of them are in Plainfield. Well, they're scattered. So let's pick, I'm gonna randomly pick a property. If you have any other preference, just let me know. Okay, so this is a property in Berwyn. Okay, Berwyn is a hot area. Now, for those of you who are not familiar with Berwyn, let me just quickly show you what the area is all about. Okay, so before we move on, let's analyze the area in 2 minutes, okay? Berwyn, for those of you who are not familiar with Berwyn. So Berwyn is a hot area right now. Let's find out why. Okay, let me make this a little bit bigger so you can all see. Okay, so here, Berwyn, right here, it's in the city of Chicago. So anything that we observe, we're gonna mark right here. So we observe train tracks, right? So these are the factors that will determine your property value, that may affect the property prices, okay? Something to keep in mind. And then as a reminder, friends, when you look at the area in a nutshell for the livability, you have to look at areas with a livability score of over 70%, okay? Anything that is below 70, you might find that those areas may have high crime pockets, high vacancies. So try to stay in areas that have over 70% livability, okay? So this is the area in a nutshell. So the only thing that stands out right here is crime as an F, and employment. So there are not too many sources of employers in that area. Let's just quickly look at the number. Number one, crime. So it seems like crime is below average. Okay, so I would question this crime being high. So there might be some pockets in Berwyn, but overall, when when the crime is below the average, it's good. Schools, we're going to look at the schools on that particular property because we're going to be checking those by the zip code through Trulia integration. And then right here, household income. Okay, so it's about the same as the average. So it's 54,000 household income per year versus the Illinois 57. Okay. Now population growth only 5%, so it's stable area. And then let's look at the industry. The industry is going to tell us more about the employment breakdown. And then housing occupancy, something that you need to keep in mind here is vacancy rate. So right here, the vacancy is 10%. So as a rule of thumb, friends, keep in mind that you want to focus on areas that have a vacancy rate below 10%. Okay, so this is in the borderline. Owner occupancy is low, 54%. And then renter occupancy is 35. So here in Berwyn, there are a lot of renters, right? So there's not so much ownership, pride, 54. So it's kind of low. So this is going to be cash flow. So buy and hold. You're going to have tenants in this area. So this is a C area based on our rating. So A being the best and D being the most challenging area. Okay, so 1 second, friends.
We can't hear you.
Okay, sorry. Thank you, John. Thank you for, I'm gonna just back up since you were not able to hear me. I just wanna make sure. Okay, so now everyone is able to hear me. Sorry for that. Okay, so we're saying that Berwyn is a C area right here.
We can't hear you again.
Are you able to hear me now? Can you hear me now?
Yeah, we can hear you now.
Okay, perfect. Thank you, John. I appreciate it. Okay, so this is a C area. We want to focus on BC. Those are the bread and butter. We want to stay away from B.
You just went silent again.
Are you able to hear me okay?
I can hear you now. Good.
Okay, perfect. Thank you, John. Okay, so again, this is a C area. We want to stay in BC neighborhoods, okay? Those are the bread and butter. We want to stay away from D areas. Those are the war zones. They're not safe. And then the A areas, those are the expensive areas, right? Because the numbers are just not going to work. It's too much of a risk. And then here, the approach that we recommend is a cash flow. As you can see, there's a lot of renters in this neighborhood. So that is why we recommend a buy and hold approach. So now let's look at the sweet spot to buy a single family home in Berwyn so that we understand what the numbers look like. Okay, so if we scroll down, the sweet spot to buy a home in Berwyn is going to be 190. Okay, now it's going to stay in the market for about over 2 months. And then let's look at how many sold distressed properties have been sold in Berwyn, 114, and there's still some distressed properties in Berwyn. 9 flips, and then now let's quickly look at the rents. Okay, so the rents in the last 12 months, for a 2-bedroom, we're gonna be collecting about $1,100. For a 3-bedroom, $1,400. So this is the breakdown of the rents. So they stay in market for a month and a half. Okay, so now let's go back to the subject property, Maple. So this is a 3-bedroom, 2-bath property. Now, the next thing that we need to do is find out how much the owner owes on the property. So the outstanding balance is 50,000 on this property. So this property, based on the ARV, could be worth between 160 to 191. So let's just, the first step is let's make sure that this is a good deal. So let's do a quick analysis. So we're going to scroll down to the comps, and then I'm just going to click search. Okay, so when I do that, what's happening is we're going to the MLS and boom, we're pulling the comps. So these are the comps that sold in the last 6 months within a 1 mile radius. Okay, so this is what appraisers are going to take into account. You don't want to go beyond 6 months, okay, and you don't want to go farther away than a mile. So what we're going to do is we're going to take these comps and we're going to average out the sold price. So this called close price, we're going to average that out, and then we're going to put it in the ARV. So right now we're going to plot the comps on the map, and then we're going to update the ARV. So the ARV for this property, we can safely say that it's about 250,000, okay? And look at these, the owner only owes 50,000, okay? So in here, the next step is just to make sure when we do the analysis before we do the wholesale is that the numbers work, right? Why? Because when you wholesale the property to a cash buyer, they will want to do the rehab. They might want to buy and hold the property, so rent the property. So we need to make sure that we do the homework for them. So we're gonna prepare the pro forma with a buy and hold and fix and flip strategy for them. That makes sense. So what we're gonna do is we're gonna scroll on, and then we're just gonna quickly run some numbers. So the first thing we're gonna do is make sure that it cash flows. Okay, so in here, this property, we are going to do the buy and hold first. Okay, so we can say that we can collect about a 1,900 rent. So this is the integration that we have with Zillow. Zillow is very accurate for the rents. And then we're gonna plug in some expenses, okay? So the utilities, when you buy and hold property, they're gonna be paid. Okay, so they're gonna pay water, gas, electric, so we don't need to worry about the utilities, but we do need to worry about maintenance. So I'm gonna put 130 for monthly maintenance. Management fee, so that's the property management, they're gonna charge between 50 to 75 per unit. And then insurance, let's bump this up to 90. Now taxes. The way to find out what the taxes are on off-market properties is to click on the owner loan tab right here. So I'm clicking on the owner loan tab. We integrate with CoreLogic. So they are the owners of all the real estate data in the United States. So they're gonna give us what the taxes are for this property. So they're kind of high, 7617. So what we're gonna do is we're gonna divide that by 12 so that we come up with the monthly tax amount. So 634, okay? So let's go back to the calculator. So we're gonna put in 634 for the taxes, 634. Now, how much are we gonna pay for the property? So we know that the owner owes 50,000, okay? And there are no outstanding liens. So right here, you need to make sure that there are no outstanding liens. Here's where you can have mechanics liens, you can have secondary mortgages that you need to be aware of. Okay, so at this point, we need to satisfy the debt, pay off the 50,000 plus we need to negotiate a deal with the owner, with Mary. So we know this property is worth 250, right? So even if we end up paying 125, right? So that includes all the closing costs, that includes a relocation package for Mary. We're paying 50 cents on the dollar. So let's just be conservative and shoot for 125,000, okay? So that means we're gonna pay 50,000 for the loan, plus we're gonna give the owner 75,000, friends. So that's a very attractive relocation package. And as far as the rehab, right now we defaulted to 20,000. So where are we coming up with the rehab? So we give you a range. between 20,000 to 30,000. Why is that? So we give you this number based on the square footage, okay? So properties in this zip code can be rehabbed for about 20,000 with this particular square footage, 1,700. And then we give you a range because we want to make sure that you have a broad estimate of a light rehab, which would be the case for a buy and hold, right? When you rent a property versus fix and flip, right? When you want to fix the property to flip it, you want to go on the higher end, right? To sell the property for top dollars. So for this case, we're just going to use 20,000 for the rehab. Okay, so we're going to put in 20,000 for the rehab, and then we're going to click on calculate. So now let's look at the cash flow on this property. So it cash flows 434. So it makes sense to buy and hold. Now let's just quickly do a fix and flip on the property. So we already default what the ARV is. The CMA that we did comes out to 255. Now on the rehab, we're going to do 30,000. So we're going to go on the high end. Okay. Now, whole time, we default to 4 months. Why is that? We like to be conservative and then take 2 months into account for the fix of the property. So another 2 months are going to be taken into account for the marketing of the property, or you could be 1 and 3. Usually we do the rehabs in 4 to 6 weeks, and those are light to medium rehab. Okay, so but to be conservative, let's do 4 months. The sales cost is a percentage of the ARV. And then utilities, in this case, we're going to pay for the utilities while we fix the property. So that's the gas, electric, water. So let's put in 150 a month. Insurance is going to be 90. Taxes are going to be 630. They're kind of high. And then we're going to be paying 125 for this property. 1, 2, 3. And then let's click on calculate. Okay, so if we scroll up, we're going to be cash flowing. Not cash flowing, we're going to be making a net profit of 84,000 should we decide to do a flip in Berwyn. So this is a very attractive property.
Can you hear me?
Yes. Okay.
Yeah. Could you, this is Sergio. Could you change the broker's commission to 5%?
Okay, yes. So I'm going to mute all of you. Sergio's request is to change the brokerage commission. Yeah, let's change that to 5%. Even if we change it to 6, yeah, so the profit goes down. So it goes down to 79,000. So you can play around with this commission. So 80,000. Now, something that I want to show you, because when we connect with the owner, we're going to be able to connect with the owner directly. And the objective for that is to, number one, make sure that we see the property from the inside. And number two, that we are able to come up with an accurate rehab estimate, okay? And obviously, number third, we're going to be able to finance the deal. So once we, let's assume that we connected with the owner, and I'm going to show you how we're going to do that. And we went inside the property. You're going to be able to use the rehab estimator. So this is going to show you all the main categories of the anatomy of the house. So you have the exterior, you have the interior, you have the mechanicals, the plumbing, the HVAC, electrical. So this is a very simple form to use. All you need to do is, for instance, put in the quantity. So let's assume this property is going to need a 1-car garage, and we're going to replace it. So you click on replace, and then it's going to tell you how much it's going to cost. So in this case, it's going to be 9,000 for a 1-car garage, okay? And then obviously you can go down the list once you see the property from the inside. So now, this is a great deal that makes sense. The next step is obviously to get it on the contract, because when we wholesale the property, we have to have the property on the contract. Okay, so to get the property on the contract, we have 2 options. Option number 1 is to do a mailer. So I'm going to go back to the pre-foreclosures. Okay, this is the filtering criteria that we used. So we can do a mailer, right? So this is the subject property, Maple. So we can have the option to preview the mailer, and then if we like this letter, for instance, we can click on print your own letters and labels. So we're going to generate the letter on your behalf, and we're going to include your contact information, your signature. So it's right here, and then we're going to address it to the owner, and that's going to have your contact information right here, and we will also generate the label. So you can just put it in the mail. That's one option. However, here, this is sort of slow because when you do the mailer, just the open rate is 3%. So if you do 100 mailers, you're lucky if you get 3 responses, and that can take weeks. And doing mailers could be expensive. So the other way, friends, is to connect with the owner directly via cell phone, email, or text. So when I clicked on Mary Jane name right here, boom, we're going to give you her contact information. And as you can see, this matches her address. So what we're doing is we're invoking an investigation service agency that will give us her contact information. This is what typically collection agencies use. When they want to get in touch with somebody, they call this service. So we're going to give you their contact information so that you can either send her an email or call her, right? So the next is we're going to call her. And then we want to set up an appointment. So what I would do is get her cell phone number and then call her. Say, Miss Mary, I understand that you're going through financial distress on your property located at 3030 Maple. I'm a real estate investor and I can help you buy your property cash. I would like to set up an appointment with you tomorrow morning or afternoon. What time works better for you? So the objective is to set an appointment with Mary, okay, at this point. So let's assume that we set up an appointment. Once we set an appointment, we need to take the 2-page contract. This is the contract that you need to have the owner sign. So I'm going to click on Make Offer Off Market. So here we're going to give you the 2-page contract that is non-invasive, non-intrusive, for the owner to sign. So this is going to have your contact information, the subject property address, and these are the contingencies that are going to help you get out of the deal should the property be in really bad shape. Okay, but here we have a big enough spread. So make sure that you take 2 copies of this contract to the appointment, and in the training section, we have about 10 videos that are going to show you how you can build rapport, create interest right here, these videos. Understand and qualify the owner. Most importantly, set an appointment and get them to sign the 2-page contract, okay? So make sure you watch those videos. They're going to help you build confidence on dealing with the owner directly. The third way of connecting with the owner is to do door knocking. What that means is you just need to go to the property and knock on the door, and hopefully Mary will open up the door. So one thing that the next step is we have everything successful, right? So at this point, we don't want to pursue the buy and hold or fix and flip. What we want to do is we want to wholesale the property, okay? So we want to wholesale the property. Now, this is one of the mistakes that many investors make. They wholesale the property to another investor. So the problem with that is that another investor needs meat in the bone, right? So they're going to give you just a wholesale fee of less than $10,000, right? When indeed, in this deal, if we get it for $120,000, you can be making a wholesale transaction fee of at least $25,000, $30,000, right? So let me go back to the presentation because I want to show you something important that you need to understand when wholesaling the property. Okay, so one of the things that you need to understand is when you wholesale the property, you have 2 options, either to do an assignment or to do a double close. So the question is, when do you do an assignment? Okay, so you do an assignment when the profit is going to be less than $8,000. Now the question is why, right? Because the minute you make more than $8,000, you need to disclose that, right, to the seller and to the end buyer. So you're the middle. So once the buyer or the seller find out that you're going to be making more than 8,000, they're not going to be happy with you, okay? So they might cancel the deal, okay? The seller might say, well, I can, now I know that I can get more money for my property, so sorry, I'm not going to sell you the property. So they can kill the deal, okay? So you need to be very careful. If you're going to be making more than $8,000, you want to do a double close, okay? So what this means is that you're going to close on the transaction with the seller. So it's between A and B. So A is the seller and you're the wholesaler or the investor, okay? So you're going to need to close on that transaction, and then literally back to back, you're going to wholesale property to a cash buyer, okay? So the cash buyer, you're going to need to do a second closing, but it's going to be back to back. It could be on the same day or a different date, okay? So when you do that, the drawback is that you're going to incur 2 sets of closing expenses, okay? Which could be negotiated who pays for those, but you're going to be paying for 2 sets of closing costs. That's the only drawback, but at least it's going to be confidential what your profit is going to be. So that is huge, friends. So if you're going to be doing wholesaling, you have to do both. You have to do assignments, and then you have to do double closing. So make sure that if the profit is going to be more than 8,000, which in this case, for sure, it's going to be, the profit is going to be more than 8,000 because we have a lot of room in that property. We have to do a double closing on that property, okay? Because otherwise it can fall through the cracks. So when you do an assignment, let's just quickly go over what that means, okay? So let's go back to the subject property. So this is the subject property, and then we made an offer on this property. So we have the owner sign this contract, right? So the final offer we agreed on, let's say, $125,000. Okay. Somebody, let me just check the chat. Sent a message. Oh, okay. So the question is, where do you get this 2-page contract? Okay. So the 2-page contract, you get it when you click on Make Offer off market. So that's how you get that offer that I'm showing right now on the screen. So it's going to be pre-filled, and let's assume that we got it on the contract for $125,000. We're going to have a session just on making offers, and we're going to go over line by line on this contract. Okay, so don't panic. We're going to go over that in the next webinar that we have. So now I'm going to ask you to click on the wholesale, okay? Because in the wholesale tab, this is where we're going to give you the assignment contract. So once we have the sales contract between the seller, the distressed seller, and yourself, now you need to assign that contract to a cash buyer. Okay, so this page, if you scroll to the bottom, will have the assignment contract right here. So if I click on it, we're going to give you a 1-page contract. This is where you specify how much money you're going to be making on the transaction. And remember, you want to use this contract when you're going to be making less than 8,000, okay? Profit. No more than 10,000, friends, okay? So once we have the property on the contract, you want to wholesale the property, okay? So let's assume for now that we're going to be making less than $8,000. So the next step is to find your target audience. So your target audience is going to be cash buyers, okay? So who are cash buyers? I'm going to click here on the system. Cash buyers are people who are used to paying retail prices cash. So these are the people who buy properties from the MLS, and they happen to have a lot of money. So they paid cash for them. Those are your target audience because they're going to be paying you the bigger wholesale fee. Because if you want to wholesale to another investor, another member of ChicagoDealVault, guess what? we are going to pay you just a wholesaling fee of less than 10,000. But in this property, you have a lot of room for a bigger wholesale fee. So right now, what we're going to do is we're going to find all the cash buyers in Berwyn, okay? So I'm going to filter by Berwyn and then click on search. Boom, we have over 200 cash buyers. So these are the properties that these individuals bought for cash, okay? And we're going to give you these cash buyers contact information right here. So this is their address. Not only that, but if you scroll to the right, look at this. We're going to tell you when they bought the property, how much they paid for the property, and whether the subject property matches the cash buyer's address. So if it says no, that means that it's not their primary residence. So you know they're investors. So if it says yes, that means that the mailing address, okay, for Joe happens to be the same property he bought. You see, it just matches. So that means that he lives in the property. So he's not an investor, okay? When you see that it says no, so that means it is an investor. So you want to wholesale the property to an investor cash buyer. Why? Because Joe, if we look at Joe, he bought a condo, as you can see, apartment 405. So most likely, he's just fine, right? He just had enough money to buy a condo for himself. So you want to wholesale the deal to a cash buyer investor. So you want to look at the ones that have no, right? Like for instance, Hector Garcia. So his primary residence is not the property he bought. Not only that, but look at this indicator, number of properties, 12. So he has bought 12 properties and most likely cash. So he is one of the best target audience that you want to get in touch with. So what I'm gonna do is, I'm just gonna click on Hector Garcia, okay? So there are quite a few Hector Garcias right here. So we're gonna give you his contact information. So if it's not the first one, you want to try the second one. And not only that, but you can scroll down and look at the addresses, right? Just to make sure that his mailing address, when we do the skip tracing, he's in Berwyn, Cermak. So let me just quickly look at this person. So the first individual, he also has a property here in Berwyn. So it might be the first one or the second one, friends. Okay, let me look at the second one. No, most likely it's the first one, okay? So this is your target audience, the cash buyers. So we're gonna give you the cash buyers that you can market the property. Now let's go back to the subject property. In here, you're gonna be able to, once you upload some pictures, generate a flyer. So it's gonna be a 2-page, nice looking document that you can email, send via text to the cash buyer that we found in here, okay? Another option that you have, when you click on post property, what we're gonna do is we're gonna help you market the property on your behalf. So we're gonna post it in the wholesale deals. Not only are we gonna post it right here, we have 44 active wholesale deals right here, but we're gonna do a blast email to the network of ChicagoDealVault. So we're gonna help you market the deal to cash buyers, to members, to non-members, and that is at no cost to you, okay? So we just wanna make sure that you're successful. So that's how we can help you market the property on your behalf, okay? Now, let's talk about, we're gonna make 10,000 on this property. So what we have to do is, once we have the property in the contract and we found a cash buyer, we need to close on the property between Mary and yourself, okay? So you have to close on it. And let me tell you the beauty about this, that you don't necessarily need to use your funds. So let's assume that we found a cash buyer that happens to be, let me go back to the cash buyers, happens to be Hector, okay? Hector is interested in the property, okay? We're gonna wholesale the property for $150,000. So we're gonna be making $25,000 profit. Okay, so we're gonna need to do a double closing. So first of all, we're gonna close between A and B. So A is Mary, B is yourself. So once we close, guess what? We can use Hector's money to close on the transaction between Mary and yourself. Okay, so that is the beauty about doing a double closing. You don't need to use your own money. You can use the cash buyer's money to close on the transaction because you're going to be doing a back-to-back closing. So Hector knows that he's going to pay $150,000 for the property. So he's going to put $125,000 in escrow with the title company for you to close between Mary and yourself. And then once that the closing happens and it's recorded, then you can he will wire the remaining $25,000 to escrow, which happens to be your profit. Okay, so you don't need to have any money out of pocket when you do a double closing. You can use the cash buyer's money to close between you and the seller. So that is extremely powerful, friends. So that is why you need to make sure that you work with investor-friendly title companies. Okay, they understand assignment and double closing. So for that, we on their preferred partners, we give you a title company. So if we go to title services, so we use Chicago Title. So they understand double closing, they understand assignments. So they're going to be able to help you in that transaction just the way I explained. Not only that, but you can work directly with Gary Davidson. So he's our preferred attorney. So if I go up to, where is Gary? So let me, appraiser. So let me go to attorneys. Where is attorneys? I'm missing it. Real estate broker. Okay, we need to make sure that we have the Gary Davidson is our preferred attorney. So we're gonna make sure that we have that category attorney because obviously he works with Fidelity and Chicago Title for his closing. So they understand double closings. Okay, so having said that, let's just go to some examples, okay, of a double closing. In fact, we did one a few months ago, and it happens to be in. So let me show you that deal. I'm gonna look it up in the MLS. So the property is, let me pull it up. 1423 Clarence Avenue. Okay, perfect. So this property, let's just go over the numbers with this property. So as you can see, we closed on the property. We bought this property for 102. Okay, back in April last year, and we sold it for 124. So this is in Berwyn. Okay, so we have a chat, a message. We got responsible for the closing costs for the transaction between the original seller and myself. Yes, so the question is, who is responsible for the closing costs between the original seller and yourself? So it's you, right? You are responsible for the closing costs because you're getting such a great deal from the owner that we like to pay for the closing costs, and you're talking about 2% closing costs. Okay, so let's just look at this example. Let me look at the details. Okay, so look at the numbers. So the original listing price was 143, and we got it on the contract and closed for 102. Okay, so that was a great deal. So let me just show you the details. So the listing agent was Elena, and then we used our brokerage, Frida Lila, to get it on the contract and closed. So we closed on the property on April 16. Okay, this property was in the market for about 2 months. So we closed on April 16. Now, this property, let's see if we can see the pictures. We had a lot of issues. It required a lot of work. So let me just show you. Look at this. So it was very much neglected, so it needed work from the outside and the inside. So the pictures may not reflect that, but it was just needed over 50,000 in work. So just by looking at the pictures, we got very excited, right? But once you went inside the property, it needed work throughout the entire property. It needed plumbing, it needed electric, pretty much it needed a roof, windows. It was just a lot of work, over 50,000. So we were not ready to spend that kind of money on this property. And not only that, but just look at the ARV on this property. So this property is worth between 160 to 178. So let's assume 180, right? So if we bought it for 102 and we were to put in, let's say 40,000, right? So we all in were at 140. 140, there's very little room to do anything, right? If we can sell it for 180, there's very little room for profit. We could have maybe made 20,000, right? But guess what? We have to manage the rehab. We have to put it on the market. So that could have taken maybe 3-4 months to do this fix and flip. Instead, let me just close this listing. Let me go back to the search. What we did is we put it back on the MLS. So we listed the property for $124,900. And guess what? In 2 weeks, we got full price offer. And guess what, friends? We did nothing on the property. We did zero. So as you can see, well, we put this property. So now we were the listing office. And then Edgar was the selling agent. So in this property, we did nothing. And in 2 weeks, we netted about 20,000. So this is an example of double closing or a wholesale by doing nothing on the property. So in this case, it made sense not to do the work. Why? Because the numbers were going to be too tight. And then we're going to make pretty much the same amount of money. We're going to make maybe 30,000 had we done the flip. But guess what? We would have the money tied up. We had the stress to manage the rehab, and then we had the stress to put it on the market, right? And then maybe make 30,000 versus making 20,000 in 2 weeks and do nothing on the property, because Berwyn is a hot area, friends. So this is a perfect example of double close. And now let me tell you something. There's another message on the chat. It says, when you're presenting the offer on this property, did you purchase it on the same? Yes. So the question is, when we got the property and the contract, yes, we used the same entity. So we used, if I go back to the offer, we used the same entity, this one. This is the LLC that we used. So we used the same entity for the purchase and for the sale of the property. Okay, so that was the question. So here's the thing, friends. So we closed on the property on April 16, right? And then we did the second closing about, so that's June 8th. So about a month and a half, so 6 weeks later. So at this point, let me tell you something. Once you close on the property, on the first property, so once we close on this at 102, it takes about 4 to 6 weeks for the deed to get recorded. So guess what? when we put it in the MLS at 124, even if they looked at the public records, they were not able to know how much we paid for the property, because at that point, when we put it in the MLS, it was not yet recorded. So they didn't know how much we bought it for, which was great, right? So at this point, when we closed on this property, not that one, this one, when we closed on this property 6 weeks later, the buyer did not know how much we paid for the property. So that's the advantage. So you have privacy of your profit. So we made 20,000. But imagine, let me give you this scenario. Imagine if the buyer knew that we were gonna profit 20,000 for doing nothing. Do you think they would have paid the 124,900? Do you think they were gonna give us a full price offer? I doubt it, friend. I doubt it, friends, because cash buyers are gonna question you. Well, what have you done to add value to the property? How can you justify a $20,000 profit, right? So they're gonna start to question you, to pretty much give you a lowball offer and just pretty much pay you a finder's fee of less than 10,000. That is why we chose to close on the property. Okay, so I believe there's another question on the chat. So the next question is, how did you get past info? How did you get past info on property? Where did you go? Okay, Paresh, I quite not understand the question. So we're looking at the listings, right? That we put it back on the MLS to wholesale the property. So 6 weeks later, without doing anything, right? So that's an example of a double closing, nothing. So there's privacy on our profit with the cash buyer. So because the cash buyer bought the property, it was an investor, a developer, and they were going to do a second addition on the property. So they were gonna spend a lot of money on the property. Okay, so that is why they probably ended up paying the full price offer on this deal. Okay, so how do you delay the recording? So the question is, how do you delay the recording? So there's no way for you to delay recording. Once you close on the property, the title company is going to send everything to the state. They're going to record everything, but it takes about 4 to 6 weeks for that to happen. Okay, so you have a leeway of about 6 weeks that you can do the double closing. Okay, and best of all, friends, again, you can use the cash buyer's funds to buy the property, so you don't need to have any money out of pocket. In this case, we did use a hard money lender. Why? Because our initial thinking was to do a fix and flip. But once we got inside the property, we did more due diligence. We found out that it was going to take too much time and work and money to do the fix and flip. So we decided just to wholesale the deal, doing a double closing. So this is just a perfect example, and it happens to be in the area that you guys picked. Okay, so we're taking some of the questions from the chat line. So another question is, how did you get past previous sales information on this property? Oh, okay. So what I did, Paresh, is just I did a search, okay, on the property here, 143 clearance. I did it, and then it came with the 2 listings. So we bought it for 102, and then we sold it for 124. You can also use the power search, right? So you can use the power search, and then you'll get the same results. You're going to get all the listings for that particular property.
Okay, got it.
Awesome. Awesome. So let's just go back to the presentation, friends. I want to make sure that this is clear, that you want to do an assignment. If you're going to be doing wholesaling, you want to do 2 things. You want to have the assignment strategy, right? And then remember, the rule of thumb is that you're going to be doing this when the profit is less than 8,000. But the minute that your profit, like the one that I just showed you, is going to be more than 8,000, in this case, we made 20,000. So we had to do a double close, okay? So that means that we had to incur 2 sets of closing costs. But still, it's okay, friends, because we guaranteed the success of the transaction of the wholesale. Even if we incur 2 closing expenses, it's okay, right? We rather pay for 2 sets of closing costs, but make 20,000, right? At the end of the day, versus making less money on an assignment. So if you're going to be doing wholesaling, friends, make sure that you're going to be doing both assignments and double closings. And when you do the double close, make sure that you use your cash buyers funds to purchase the deal between the seller and yourself, okay? Because that money is in escrow. So that is the beauty of it. And then obviously making sure that you use our preferred partners, Gary Davidson. We're gonna make sure that we have that category for the attorney, Gary Davidson, as the preferred partner, because he uses Fidelity, Chicago Title. They are very familiar with assignments and double closings. Okay, so at this point, we're taking some questions from the chat line. If you have any other questions, please make sure you post them. So the next question is, how much do you have to put down with the hard money lender? So we typically put down 10%. We put 10% down, and they finance up to 90% of the rehab, okay? Now, another question is, from the pre-foreclosure listings, is there a way to tell how long the owner, seller has before the property goes to auction? Okay, so this is a great question. So the question is, let's go back to this, to the subject property, okay? So the subject property is Maple. So the question is, we found this awesome deals, friend, the awesome deal, friend. So the question is, when we will Mary lose the property to the judicial auction? Okay, so to answer that question, we need to look at few things. First of all, the foreclosure process in Illinois can take up to 2 years. Why does it take up to 2 years in Illinois? Because Illinois happens to be a judicial state. So in the United States, the foreclosure process has 2 types of states, judicial and non-judicial. There are about 21 non-judicial states in the United States. So what that means, friends, is if the state is non-judicial, like Illinois, judicial, like Illinois, that means that the foreclosure process is regulated by the court. Therefore, it's going to take up to 2 years. But there's other states like California. All the West Coast are non-judicial. So what that means is that the banks are not regulated by the court on the foreclosure process. Therefore, they can foreclose on the owner in less than a year. Therefore, or consequently, the markets in the West Coast, like California, Texas, Arizona, they're going to rebound a lot quicker than Illinois and the East Coast. Okay, so when the when the burst happened, the West Coast market rebounds a lot quicker than the East Coast. Why? Because most of the states in the East Coast are judicial. So that means they're regulated by the court. So they're going to take up to 2 years. So now, having understood that, let's look at the dates. So when was the filing date on this case? This was back in October last year. Okay, so this case can take up to 2 years. So do the math. So Mary can lose her property to the auction, to the court auction, maybe in the next year or so. Okay, just be conservative. She has up to 2 years. Okay, so I would say realistically, in the next year, she will be, her property will be going to the court, to the judicial auction at the courthouse. Okay, so she has about a year. That is why, friends, we want to look at upcoming auctions, right? because these sellers are going to lose their property very soon, in 30 to 45 days. So let me just quickly show you that. Let's find out if there are any in Berwyn. Berwyn, since we're working on Berwyn. Berwyn. Okay, so Berwyn, let me see if there are any upcoming auctions in Berwyn. Okay, we found 28. Okay, so what does that mean? Let me show you. So I'm gonna scroll down. So you see the auction date right here. Okay, so if I pick right now, the date is 1/16. So for instance, I'm gonna pick this one. So this property is going to go for auction in 4 weeks, okay? But also look at the filing date, right? So this is a perfect example. Okay, so I told you the foreclosure process can take up to 2 years, but this has taken a lot longer. Okay, this has taken about, so it's gonna be 17, 18. So this is gonna be a little bit over 2 years. So when the case is in the 2016, 2017, that means that the upcoming auction at the courthouse is gonna happen, okay? That is why this is one of our favorite lead pipes, because these sellers are gonna be extremely motivated, okay? They're gonna be extremely willing to work with you, okay? But in this case, this particular property, let me tell you, the balance due is 164. Okay, let's check if there are any other liens. So no other liens. So 164, and then the ARV is 173 to 191. So there's very little room on this property. So that is why we would not pursue this property, because there is very little room. There's not much equity to play with, right? Because we need to satisfy this debt. We need to pay the 165. And then if we still need to do work on the property, there's not much room for profit in this deal. So we would skip this deal. There's not enough equity, okay? And let me share something with you. When there's very little equity on the deal, many investors pursue a short sale, okay? So what that means is the owner might be underwater, like it might be the case for this Alberto. So what you can do here is stop the foreclosure process. The way to stop it is to have Alberto hire, and this can be done through you as the investor, an attorney that is going to file for bankruptcy. So what that's going to do is that's going to automatically stop the foreclosure process. And you do that just to buy some time, right? Because once you stop the foreclosure process, then you can negotiate a short sale with the bank directly, in this case with the plaintiff. And then you have the bank's attorney, so you can actually work with the bank to try to negotiate a short sale. That is in the case that the owner doesn't have much equity in it. So that is also another strategy that you can work with the owner to try to negotiate a short sale when there's little equity. But we just like easy deals, right? So we just like to target properties that have tons of equity, right? So that is why when we go to the filtering criteria, we like to filter by high equity. So let's just, for sakes, well, we found one property that has high equity in Berwyn that is coming up for auction. So look at the difference in the numbers. So this property is going to go for auction in about 5 weeks, okay? Now, let's look at the numbers, friends. So look at this. The outstanding balance is only $23,000. This is a 2-bedroom, 1.5 bath. The ARV on this property could be 180, 199. So this is, in fact, a very good deal. Now, let's look at the liens. There are no liens on these. So here, Lori is very motivated right now to do something, because guess what, friends? In 5 weeks, her property is going to go to the judicial auction at the courthouse downtown. So she's going to lose, guess what? All the equity. How much equity does she have? She has about 150,000 in equity. So she's going to lose her equity. She's going to ruin her credit, and she's going to lose the property. So this is a great individual to get a hold of, right? Because look at this. She owes very little money. So in fact, if we skip trace her, we're going to give you her contact information right now. So this is a great deal, friends. So if you're on the webinar, make sure you take a picture or take a note. In fact, I'm gonna send the address to everyone on the chat. Everyone who is interested in Berwyn, this is a great deal. So I'm gonna send via chat this address, okay? Friends, because you have 5 weeks to get in touch with this owner. So we give you their contact information. You can also do door knocking, but here there's a huge spread for a big profit on this deal, okay? So that is why there are tons of deals, friends, out there with high equity. So there's no reason for you to pursue deals with no equity. This is an example of a deal that is gonna give you, you're gonna have plenty of time. You're gonna have about 5 weeks, which is plenty of time to finance the deal through a hard money lender, and we can help you with the financing, okay? Line up the financing, connecting you with the right lenders, and then you have enough room for profit. That's just a perfect example of how you can pursue and do a double closing or do an assignment on properties that have enough profit, okay, friends? So are there any questions on the line? We're recording this mastermind. So for those of you who want to do a replay, you're gonna get the replay later this evening. So something that I wanna bring up to your attention is this Sunday, we have a great event, friends. I'm gonna show this on the screen. I wanna make sure that every single one of you is present. It's called, nobody has ever done this. This is the first time this has ever been done. It's called speed networking, okay? So this is primarily for ChicagoDealVault members. So what we're gonna do here is we're gonna do an exercise. We're gonna make sure that you get to meet every single member in DealVault. Now, what's the objective? Because let me tell you, in real estate, it's a people's business, it's who you know. So we wanna make sure that we connect you with the right partners, that you can either do a buy and hold, fix and flip, do a wholesale. So we wanna connect you with the right people. So we're gonna do a fun exercise. We're gonna facilitate that. We're gonna have appetizers, drinks, music. So it's gonna be a very cool event. It's this Sunday, January 20th at 1:30. It's gonna be at the Jory, the Chicago RIA office on the 3rd floor. So make sure you come to this event, speed networking event. It's gonna be a fun event, food. You're gonna meet all the ChicagoDealVault family. It's gonna be awesome, friends. We're gonna connect you with the right people. And you know what's gonna be so amazing? At the end of the event, we're gonna send you a text message with the right partners. So it's gonna be, we're gonna blow your mind away, okay? Because we're gonna tell you more at the event, but at the end of the event, you're gonna make some notes. We're gonna capture those, send those to our staff, and they're gonna do the matching, okay? When we find matching, we're gonna send you a text with the right match. So it's gonna be very powerful, friends. Make sure you come to this live event, and it's free for all ChicagoDealVault members. Okay, having said that, friends, thank you for joining tonight, and have a great evening. And please make sure you come to this Sunday event, 1:30. And then if you have any deals to pitch, please make sure that you bring them, because we're gonna let you pitch your deal. If you have a wholesale deal, Anything that you have going on, we're going to let you do that. We're going to facilitate that as well. So it's going to be a very powerful hands-on live event. Refreshments, appetizers are included, and it's for free, friends, only for Chicago DealVault members. Okay, having said that, thank you everyone for joining tonight. Have a great evening, and hope all the information was helpful tonight. Thank you.